It is Sunday, April 6th, and the after hours markets just opened, and wow, it is shocking what is happening. So much going on in the markets with the tariffs, so much selling off. People are freaking out, people are losing money, everybody's losing money. Let's take a look at the charts and just zoom out a little bit and get kind of an idea of what's happening in the markets. Well, if we jump right into it, I was looking at Apple, and if we take a measure here, and you go from the all-time high down to where it's trading currently, we're at around 27.5% down on this stock since literally in around, I believe, like December. Just getting crushed. So many good buying opportunities, but yet it just continues to sell off and people are freaking out. If you zoom out, and I mean, look at this. This is around December 2021. We had a peak here, and then it fell to around 29%. It made a comeback, and then it fell again, down all the way down to 32% before then continuing up. I mean, fell way below the 200-day average, which is the red line, and you can see now we're way below the 200-day moving average, and just getting absolutely crushed. And one thing you have to think about is when there's fear in the market, when there's blood in the streets, that's when you buy. And it's extremely painful because I'm down about $100,000 in the past week. But that, you buy and then it keeps falling, you buy, it keeps falling. That's part of it. And then all of a sudden you wake up and woof, the market has turned around and we're cruising back up. I wanted to show this, the fear and greed. Well, sorry, we got to add there. Fear and greed. Look at this. Extreme fear. On a scale of 0 to 100 or 1 to 100, we were at 4. I mean, and this is just a clear indicator of what's going on. Obviously, huge fear with the tariff war, the economic war that's going on, and the retaliations that are happening. But this is where things get really exciting because there's so much opportunity to be had. This is a Tesla chart. Sorry, that looks a little crazy. Tesla falling. It dipped below a few weeks ago and recovered. Then it's dipping a little more. Just so many good buying opportunities. Apple, I am really looking at. SoFi is getting crushed as well. You can see, I mean, from its high, let's see how far down it is. It is around 48%. 48%. That is just a astronomical amount. The S&P 500. Now, if we zoom way out here, I have to shrink this chart because it gets a little crazy here. If we zoom out here, you can see back here, it was in January or December, January of 21 and 22, all the way to October of 22. You can see, I mean, it was just kind of on a downward trend. And I mean, it fell all the way down somewhere in here. And look at that. I mean, 26%. I mean, people were freaking out back then, right? And let's take a look and see where we're at now. I know we're not down. I don't believe we're down 20. Yeah, we're down about 18%. But again, this is just a huge buying opportunity. And if you zoom out and think about this, the people that bought up here, they're still in the green. Barely, but they're in the green. They bought at the peak at like 480, and now it's 505. They rode that 480 if they held to the peak all the way up to 612, so they were really in the green. But think about the people that bought the dip down here. I mean, they bought down, between 350 to 400. And then if they held, they would have rode it all the way up to 6 something. I mean, you're talking about, 50% gains or whatever. I mean, that's impressive. So buying these dips, this is where it starts. This is where you have to reverse, do what the opposite of everybody else is doing. I didn't even take or chart Amazon. I haven't looked at it. Man, that is a crazy looking chart. I got to shrink this down here. Let's take a look here. So I mean, this was back in 21, it fell all the way down to 56%. That's crazy. 56%. And then here it's down. Well, it was down here, but yeah, I mean, 30%. 30%. I mean, it was all the way up to basically $245 and it's down to $170. These are huge buying opportunities. So, moral of the story is yes, does it hurt? Is it painful? Yeah, absolutely. It hurts and it's painful in the short term. And this could continue for, the next 3 to 6 months. I don't have a genie in a bottle. I have no idea. But all I know is buying the dip and doing the opposite of the majority of people is the right move. When it's red, you buy. When it's green, you sell. It's the opposite. So many people, when the stock turns around and it's running, that's when people FOMO in and they jump into it. They buy at the peak, and then all of a sudden, woo! It drops, right? So this is, even though it is painful, you say you sell a cash secured put, and the stock was at $75 and you did a $70 strike price and now it's trading at $50, that doesn't feel too good, right? But thankfully you didn't just go buy at spot and buy it at 75, right? So, getting in and dollar cost averaging into these positions is crucial. And right now, I'm looking at these charts and I'm just like, man, these are some big opportunities. So I'm grabbing some more cash and I'm going to throw it into the market. So I just wanted to go over that with y'all before we hit Monday tomorrow, and just show y'all kind of, if you zoom out on the charts, it can help so much with giving you a bigger picture of what's happening. So just wanted to share that with you. I hope y'all have a fantastic week. God bless.